by U Mortgage. It is great to have you back here on this jam-packed day on this Friday of sessions we have going. We are welcoming Jimmy Hobson back, and in this session, we're going to be talking about VA loans, something Jimmy and many of our loan originators are passionate about here at U Mortgage. Really fortunate to have Jimmy on this call once again, and Jimmy, I'll pass it to you. Thank you for joining us again, and how's your day going?
That's good, man. Good. Thanks for passing it over. So got a little feedback from the last one of these I did half an hour ago that sometimes it's hard to hear me. So if that happens, please let Ryan know because I'm running off the laptop. And so sometimes I may not be close enough to it. So if you have trouble hearing me, please raise your hand. All right. So for background, I'll have Ryan go to the next slide real quick. So we are going to talk about myself here. I am a veteran advocate for perspective. I originated 94 VA loans last year. I'm one of the top VA brokers in the country. I have a passion for it. It's just what, I do all the time and I love it. So if you have any questions along the way, this is actually a presentation I built for realtors because I teach continuing education to realtors in the state of Utah. But I'm going to gear it towards realtors, consumers, everybody, because there's a lot of misconceptions about VA lending, that people need to look at now. Quick shout out. I belong to a community on Facebook called Vetted VA. Vetted VA is a safe place for veterans and spouses of veterans where you can go and ask any VA question you have without any solicitation. Okay. It's moderated and run by a bunch of us that are essentially volunteers in the grand scheme of things. It was built by my buddy Chris, a Marine Corps veteran, because he got tired of the way retail VA lenders treated veterans. Big companies like Wells Fargo and Navy Fed and USAA and Veterans United. Traditionally they're much, much more expensive than we as lenders. So we want you to get all the information you have, and should you guys use them, use that leverage to get the best deal possible. So I implore you to join Vetted VA's community on Facebook. Go and sign up and make sure you answer all the questions. If you don't answer all the questions to get in, they're not going to let you in. A 5-year-old can answer all the questions, so it shouldn't be that hard. So anyway, if you have questions for me at all about VA loans, we are well connected. We operate in 43 states. I myself am licensed in 3 states. My branch is in about 6, but corporate is 43. So we've got other VA professionals that work very closely with us to do a lot of VA lending. So we are very well equipped to handle any VA loan we need to, essentially nationwide. And we have connections with great originators throughout the country. So if you want a local presence, we can find you one. If you don't mind, if we're not local to you, we can help you as well. But that's our advocacy. We want to make sure that you as the veteran and or someone that supports veterans has everything they need to make this work. So that's kind of my show. Hit me the next slide, will you, Ryan? Okay, go ahead, go again. Okay, obviously the reason I do what I do, go back to the last one. The reason I do what I do is for the guy on the left there looking at us. That's my youngest brother, Marine Corps veteran, 03-11. I watched him come home from Iraq and saw the things he'd been through. And I thought, man, if I'm going to do this, I'm going to do it and take care of these guys and gals because they put their lives on the line. Whether you agree with the military industrial complex or not, it doesn't mean that you can't support our troops and the people that do put their lives on the line to serve in the U.S. military. Just like firefighters, just like police, obviously they do their job, and are proud to serve our country. So that's why I do this, because I watched the things that he's been through and guys he served with. And it's just, I thought if I can make this a better, easier process for the veteran, I'm going to. So that's where we got. So this presentation is myth busting. If you guys have any questions along the way, I'll answer them as we go. So I want you to make sure that, if something pops in your head and say, well, I heard this, let's shoot down the myths as we go. Okay. So this is your time as well. So raise your hand. If you got a question, ask it. All right, go ahead, Ryan. All right. Myth number 1, 0 down equals a weak buyer. Okay. Next slide. Okay. The VA borrower of 2020, the median FICO score is 712. median liquid assets $17,032, median household income $50,695. The average loan amount $258,166 in Arizona. I stole this from my buddy Leroy. Veterans have made a down payment 28%. So, you know, a lot of people think because a veteran is doing 100% financing loan that they're somehow a mediocre buyer. Well, based on the stats, that is not accurate. There are plenty of stats and data to back up that the VA borrower and the VA home loan is actually the best loan there is. It actually outperforms even conventional. And we can talk a little more about that, but here's the VA borrower of 2020. Go ahead, Ryan. Okay, VA loans are hard to close. Okay, go to the next one. All right, underwriters at the lenders are encouraged to consider every possible appropriate factor in seeking a proper, I gotta move my picture here because I can't see, a proper basis for approving applications for home loans for every qualified veteran, straight from the VA handbook, okay? So the VA has their own underwriters that are actually trained in VA underwriting. They call them a STAR or a staff appraisal reviewer. They are given direction essentially to do anything possible within the realms of underwriting and guidelines to make a loan happen for a veteran. Okay, so they are not harder to close. Go ahead, Brian. Okay, as long as lenders document their reasoning, it's extremely unlikely that VA staff would ever take issue with their decision. Okay, next slide. So what that means is, just because you think you may not qualify, or someone may not qualify because maybe they got a 620 credit score, there may be extenuating factors that allow them to qualify. The VA has got the most liberal underwriting there is, okay? But it also outperforms every other thing. So if you look at the portfolio performance default, the VA is at 1.98%, conventional is 2.47%, FHA is actually higher than that number at 6.1%. Lender protection for default, okay? So this is why. The VA, or Ginnie Mae, guarantees 25% of this loan, right, for a veteran. So if they borrow $500,000, the lender's protected up to a certain amount. FHA, obviously, they've got mortgage insurance, but there's a possible payout on the claim. Fannie and Freddie don't have guarantees, right? So that's where the protections lie. Unfortunately, because of that, a lot of lenders will focus on VA loans. They'll change their name. They'll focus on VA loans, and they'll make their money off the backs of veterans. I would get into pricing and loans and things a little more, but it's kind of going to go over most people's heads. But on average, a lot of your big retail lenders are making, 1 to 2% internally more than a lot of wholesale and VA advocate lenders, which could equate to 0.5%, 0.75% sometimes in rate, and sometimes $2 to $3 or $4 in fees. So, at the end of the day, it all adds up. So that's one reason why we're doing this. Now, lenders love VA loans because they perform so well, right? It's the best performing loan there is, obviously, and then it looks good. It's a public image thing. Now, mind you, whether that's the right or wrong reason to do it, most of us don't care. We want them to do it and provide better services to veterans. Go ahead, Ryan. Okay, lender overlays. Here's another reason why the VA is a great loan. There are no lender overlays of VA, or very little, I should say. Depends on the lender. So most of our lenders don't really have overlays. Conventional has the highest amount of overlays. Obviously, it's the most popular loan, but you have to have the best credit. Your DTI has to meet certain parameters, so on and so forth. FHA has more overlays than VA, and of course, VA is probably the easiest loan to qualify for if you have VA loan eligibility. So those are the things you're going to want to look at, right? So go ahead. Okay, next one. Too long. They take too long. Okay, all right, that is false. So 99% of all VA home loan lenders are underwritten by lenders with automatic authority, which means they don't need VA approval. So they don't have to call and get extra approval from the VA. They have automatic authority, which means when the underwriter signs off on it, it's done. Okay. USDA, for example, once you're approved by the lender, then they still have to send it to USDA. That can be another 4, 5, 7 days in some areas. Okay. So that's the other beautiful thing about a VA loan is that they do have automatic authority. So they can underwrite and approve very quickly. On average in my market, I'm seeing VA loans done in 3 weeks, 24 days. We can close as fast as 2.5 weeks, depending on appraisal turn times. The VA does have set appraisal turn times, so that's one thing to take into consideration. But every market's different. So if you're looking to get a VA loan in a certain market, I would ask you to reach out. We can look at turn times and figure out what does and doesn't make sense. Go ahead, Ryan. Okay. Again, from 17, the average turn time is 26 days. Obviously, they've got it does not include new builds, but new builds are a little longer, which adds that 26 days. But on average, here in our market, we're 3 weeks, depending on how fast we need to turn it around. In some markets, a little longer, depending on appraisal turn times, but across the board, you're about 26 days, excluding new construction. So that's a good thing. Go ahead. All right, myth 4. Seller has to pay all vet's fees. Okay, go ahead. That is also a myth. The seller does not. So, all right. So some lenders charge origination, some do not, right? The following fees are not allowed. Only there's 1% origination fee being charged. So these are the unallowable and allowable fees. So first of all, there's a myth that the seller always has to pay pest, right? Or termite inspection. That is not 100% accurate. If the veteran is not paying 1%, then they can actually pay for their own pest. Now, every state has different rules and regulations. You're going to want to talk to your different rules and regulations. Like in our state, they won't allow the veteran to pay pest according to the way the contracts are written. But that doesn't mean that it doesn't happen, right? So if the 1% fees are being charged, the following fees are not allowed. So an appraisal, obviously, inspection, settlement fee, doc prep, underwriting, processing, application fee. The veteran walks away from the deal, pest, obviously, attorney's fees, so on and so forth, right? So there's unallowable and allowable fees. A lot of it depends on how they operate. The majority of people in the wholesale channel, which is what we are, do not charge origination fees. So most of these fees, you still end up paying, obviously, some of the title and escrows and of course, appraisal fees, but the fees are normally lower, obviously significantly lower rates. So whenever a lot of people have this myth that the seller has to pay a bunch of fees. A lot of realtors won't take VLs because that's accurate. That's not accurate. For example, pest inspection could be $100, right? In the states that require someone other than the veteran to pay it, anybody can pay that fee. Doesn't have to be a seller. The realtor can pay the fee. Lender can pay the fee. Anybody but the veteran can pay the fee. I've paid, 24 termite fees. I don't give it. If $85 is going to stop a deal from happening, I'm paying the thing. Okay. So that's the things to look at as a veteran. Go ahead. All right. Myth 5, appraisals are harder. So I'm going through this fairly quickly, but let's talk about the elephant in the room. So a lot of times real estate agents will not accept VA loans because they feel like VAs historically have lower appraisals. Now, the greatest thing about a VA loan is built within the VA appraisal process. They are the only appraisal process with 2 built-in ways to achieve value. So what happens is this: appraiser goes out, they work up an appraisal. If they don't feel like they can achieve value, they will issue Tidewater. Okay. Tidewater is an act that came out of the VA. What Tidewater means is essentially they give the realtor the opportunity, of realtors, the opportunity to produce comps to justify value. Okay. If that doesn't work, then there's reconsideration of value. Go ahead, Ryan. Okay. So phase 1, Tidewater. Okay. Appraiser has not been given value yet. Appraiser must initiate Tidewater alert. There's 48 hours for us as the lender and the realtor to give 3 comps. So if you're the consumer and we tell you that's what Tidewater is, that's what it is, right? Now, at phase 2 is if they either receive the comps to support the purchase price, they don't support the purchase price, or they've got no comps or response in 48 hours, right? Then they issue the value, send it to the lender, okay? So that's Tidewater, all right? So go ahead, next slide. Suppose it still comes back below value, okay? You have a couple options. You can negotiate the price for the seller. You as the veteran can come out of pocket the difference, okay? Or we can do reconsideration of value. So let's talk about all 3 of those things. So let's say you're offering $450 in the house, the appraisal came back at $440, right? You can go back to the seller and say, hey, we want to do this, will you lower the price? Well, let's say the seller decides to lower the price $5,000, right? You as the veteran can pay above appraised amount if you choose. Now, the seller doesn't have to take that lower amount. You also don't have to accept that lower amount on your contract. Obviously, you want to look at your contract very carefully, make sure it was written correctly, but you don't have to accept that. Now, if you do decide to pay above appraisal, those have to come from your funds only. So let's give an example. Let's say your closing costs of loan are $5,000 and your appraisal comes in $5,000 low, right? So you cannot get gift funds to cover an appraisal gap. So if all you've got is $5,000, then you may be out of luck. But if, let's say you have $10,000, right? You can use, if you can get someone to pay closing costs, you can use your fund. It has to be your funds to cover the appraisal gap. You can use gift funds to cover any closing costs. So that's a big advantage. Just remember, they just have to be shifted a little bit to make it work. Now, if you don't want to deal with that stuff and you think the appraiser just really was crappy at their job, then we can do what's called a reconsideration of value. So the way that works is very simple. So the lender gets it back from the appraiser. The SAR enters a notice of value into the VA system, and that's attached to the veteran for 6 months. Big misnomer is that a VA appraisal is attached to a property. It is not. FHA is, VA is not. It goes with the veteran. Okay. So if you decide to back out of that property, another veteran goes to buy it a month later, they get their own appraisal. Pretty simple. But if you love this house, can't live without it, you want to make sure it's what you want, you can request in writing for the lender initiate a reconsideration of value. So once they do that, basically you provide your realtor, you provide the letter, your realtor provides the comps, your realtor provides a grid with a breakdown of why they feel like the house is worth what it's worth, and they submit it. The SAR, the lender, obviously, sends a requested dollar amount of new value to the VA, who has 50% authority. So a lot of times, actually, you just send it to the VA directly to request a reconsideration of value. Then the staff at the VA, depending on where your regional loan center is, ours is Denver, will review that and then come back. I had one that came in $15,000 low about a month and a half ago. We submitted a reconsideration of value and get $8,000 of that back. So it's not uncommon to get it back. Now, I will prepare you. The VA appraiser's number one job is to protect you, the veteran, more than anything else. Okay, so that is their job. They're not going to try to put you in a hole, in value. Now the market's so crazy that oftentimes they just frankly miss stuff because our market's moving at such a rapid pace. You never know what is sold and what hasn't sold, and they can only use sold comparables. So keep that in mind. All right, go to the next slide. Okay, so those are your options. Okay, so you're out shopping for a house. You want to get a VA loan. The appraisal comes in low. They're going to issue time water. They're not going to tell us what the value is. They're going to make us justify the value. If it still comes in low, then you have reconsideration of value, but you can negotiate with the seller as well. Okay, so those are your options if it comes in low. Now, this is the most important thing to a veteran. Number 6, you can only have one VA loan. Go ahead. Okay, that is not accurate. So I have veterans that actually have 3 VA loans. So let's suppose you graduated from boot camp at Paris Island and you bought yourself a condo in near Paris Island, right? That uses up basically your basic entitlement. Okay, you still have what's called bonus entitlement all the way up to the conforming limit, right? So you've got bonus entitlement all the way up to that higher value. So if we do the simple math, so essentially you can keep that house with a VA loan and buy an additional house. So let's say you bought a condo for $144. So let's do the quick math. I'm going to use a calculator. You can't see it, but I'm going to run through it for you. So the conforming limit today is $647.2. Now, I will preface it with this. The VA has no loan limits if you qualify, unless you have a VA loan in place and you don't plan to replace. So if you plan to keep that other VA loan, then you are beholden to the conforming limit. So you take that number, right? Let's say you take that number 647.2, you divide it by 4. So 161.8 over here, right? Let's say that your current house you only bought for 144. So you've used 36,000. So if you got 161.8, right? Minus 36,000, that leaves you with 125.8 left. You times that number by 4. That means you buy another 503,000 essentially at 100% financing. Okay, so that's how bonus entitlement works. Now, if you don't have a current VA loan, you can buy whatever you want as long as you qualify for it. Now, also, a lot of veterans will take this first property and refinance it into a conventional loan to free up all of their entitlement again. Okay, you can do that one time, right? Go to the next slide, right? So basically the same kind of thing, right? is how much bonus entitlement we have, 125.8, gives you a $503,200 max sales price at 100% financing. Now, you can exceed that number as big as you want to go if you can find a lender to the land, but you're going to cover 25%. So let's assume we've got that 503.2, right? And let's assume the house you want to buy is 703.2, right? So minus 503.2, that's 200,000. The VA, you got to cover the VA guarantee above that. So that means you would have to put $50,000 down or 25%, which is the VA guarantee. Okay. So that is what you would need to do. Now, again, I've done VA loans for $1 million, $1.2 million, $1.3 million because the veteran had full entitlement, but you can still exceed even your bonus entitlement if you cover the 25% VA guarantee. So that's the beauty of the VA loan. Go ahead and go to the next slide. Okay, so VA myth versus truth. All right, so I'm going to pause right here. Do we have any questions?
Yeah, Jimmy, one question so far talking about like allowances. So somebody asked, can I use my basic allowance of housing to qualify for a VA loan?
Okay. Well, yes, it counts. Yeah, so if you're active duty, your income counts as follows. So you've got your base pay, your BAH counts, and so does your BAS. So those two figures, the cool thing is they're not taxed. So let's say those two figures are $1,500, for example, right? You can actually gross those up 25%. It's not taxed. So it's really like you've got 1875. So yes, you can 100% use those two items. And frankly, if you get like, let's say like we're near an Air Force base here. We have a lot of folks that get flight pay. You can count flight pay. If you're a linguist and you get extra pay for being a linguist, you can count that pay. As long as it's continued and it's expected on your LAS, you're going to get it. Now, obviously, when you PCS from location to location, your BAH will change, and it'll also change if you're married. It'll also change if you have the dependents. But yes, 100%. That's you can use that to qualify. So we'll talk when we get a little further in. We'll talk more about exactly how the VA qualifies you, so that you guys can prepare yourself for that. So, any other questions, Ryan?
No, we're all good at the moment. Thanks, Jimmy.
Yeah. All right. So myth versus truth. Zero down equals weak buyer. So my VA borrowers on average buy more expensive houses and have better credit. In my experience, I did 251 transactions. 94, like I mentioned, were VA. On average, my VA borrower is better qualified than my conventional one. And my conventional folks are awesome. So that gives you an idea. They're harder to get through underwriting. Also false. Now, again, if you work with someone that doesn't know what they're doing, that could very well be the case. But if you work with someone that understands VA lending and they use a good VA lender, you should have no issues. Do they take longer to close? No, they don't. Now, you can close a conventional loan in probably 7 to 10 days. Without a quick turn time on a VA appraisal, 7 to 10 days is probably unlikely, but we've closed in 12 to 14 days before in our area, right? Sellers must pay veterans fees. We talked about termite. That's really the biggest thing. Seller doesn't necessarily have in some states, the veteran cannot pay that, right? Because of the contractual language. The VA is not actually who says that though, because if you get charged 1%, you cannot pay that. But if you don't as a veteran, you can should you choose. Now, our state again doesn't typically allow it, and most underwriters don't understand how it works. And at the end of the day, for $65 to $100 to stop a transaction from you buying a house, most people, we're going to get that solved one way or the other, right? They're tougher. VA appraisals tougher. Not true. Now, the beauty of the VA, like we mentioned, is they're basically outside of getting initial value. There are two other ways to get value. So if we don't achieve value, they invoke Tidewater. If that doesn't work, we do a reconsideration of value. You always have more negotiating room. So there's ways to do it, right? So we can do that. So, and then you can only have one VA loan, not active. I have clients that currently have 2 or 3 VA loans. You can also get your entitlement back, and those things. So as we get to the end, we'll talk about the types of VA loans as well as how to qualify. Go ahead, next slide. Okay, 3 questions. So this is really geared towards realtors. So if you're a financial professional and not a veteran, the 3 questions we as realtors and lenders should ask every single person we deal with is, number 1, are you or your spouse a veteran? Okay. Number 2, are you entitled to disability from the VA? Disability pay is also grossed up 25% for income. Okay, it's tax-free. Okay. Do you have a certificate of eligibility? Certificate of eligibility is the only document that matters in a VA loan. You can make $1 million a year. You could have served in the military. If you do not have a COE, you do not buy a house. Period. End of story. It is the one document that allows you to order an appraisal. It's the one document that allows you to get approval from the lender. Most lenders will actually shoot down even a submission if you don't have a COE. So that is very, very important. Go ahead, next screen. Okay, who's eligible? Here we go. Next screen. Okay, here we go. So these are the different times of who is eligible and who's not eligible, right? So technically, you know, if you've been active duty for 90 days since 1990, you're eligible. Obviously, this talks about everybody, you know, post-Vietnam, so on and so forth, the different eras. The questions we always get are very simple. Does basic training and or tech or infantry school count as active duty? It does not. So if you go through boot camp and then you get assigned to your base, you need to be in the military for 90 days to be able to get a VA home loan. Okay, active duty, right? So you know, there's obviously, you know, there's situations, we'll talk a little bit more about National Guard and stuff as well. Go ahead to the next slide. Okay, documents needed to obtain your COE. So if you are on active duty, oftentimes you'll need a statement of service, but traditionally we'll be able to pull a certificate of eligibility through the VA portal, right? If we can't, then we'll need a statement of service from your commanding officer. Name, date of birth, social security number, signed by your commanding officer that you're active duty, right? Sometimes if you've been in the reserves, right, or National Guard, you know, sometimes we need that as well, statement of service, because we can't pull you up. If you're out, a DD-214, either a copy 2 or 4, showing your level of discharge, honorable, obviously. Sometimes we need that to apply for the COE. The VA updated their systems a few years ago, and so people that have even had a prior VA loan, sometimes we need a DD-214. Okay, so sometimes you need that statement of service. Obviously, for reserves points, copy of discharge. National Guard similar. Now, both of those, unless you've been activated, require 6 years. Now, a lot of people last year got activated under orders due to COVID from President Trump. So you may have gotten some of those orders, or if you got orders to, you know, somewhere for 90 days, so on and so forth, you may be eligible sooner than the 6 years. When in doubt, reach out to a competent VA professional. If you have questions, reach out to us at U Mortgage, and we'll get you, even if it's not someone that works here. I know a competent VA lender in every single state in America that can help you make sure this is an easy process. We, as VA lenders and advocates, will do our best to help you get a COE, even if we don't even help you do a loan. Our job is to help you achieve the dream of homeownership. There should be nothing in the way of that. So whatever we can do to help, we want to. Again, I go back to the vetted VA community, massive help and support that will help guide you and help you get these things. Okay, next one, please. All right. If you haven't seen this is the document. This is the certificate of eligibility. This is an example of one from the Army. They are funding fee exempt because they have a disability rating. This particular veteran either has never had a VA loan or paid it off, and it closed and it's gone. So there's no more entitlement charge up near the top, as you can see. Okay, so this is what the document looks like. Oftentimes, if you retire or an e-benefits, you can pull this yourself, or we as a lender can pull it through our portal. That is our job too. You know, sometimes lenders are making you pull that. My first conversation with a veteran, I pull it if I can, because I want to know exactly what we can do for you from the beginning. Okay, next slide. Okay, all right, let's talk about the VA funding fee. Okay, no one discusses this a lot, but let's talk about it. The VA does not charge mortgage insurance. They have what's called a funding fee. Okay, all right. So the VA does not require down payment like we talked about, but there is a funding fee. Now, if you have a disability rating and a Purple Heart, you know, typically there is no funding fee. Even with you can have a rating of 0, by the way, because let's say you're in the active duty guard you can actually get a funding fee and a rating while in the Guard, just not active duty military. So let's say you have a rating, even if it's 0% because you're still getting paid by the military, you can still qualify for no funding fee. Now, this is your first loan with the VA. Your first time use funding fee is 2.3% of the loan amount. It is rolled into the loan. So if you borrowed $100,000, for example, you'd have $102,300, right? Now, if you want to put 5% down, that'll lower that down. 10% down lowers it down again, okay? That is your first time use, right? Okay. Subsequent use is 3.6% active duty reserves and National Guard, 1.65, 5%, 1.4, 10%. Now, if you have a VA loan and you have no rating and you want to do a cash out refi, 3.6%. It's always 3.6%. There's no way to lower that. It's not based on loan to value. So I implore you, if you are out of the military and you think you should have a rating, whether it be for tinnitus for your hearing loss, or maybe you jumped out of planes and screwed your back up, get your benefits. VA benefits are allocated by amount of use. So if people are not taking advantage of VA benefits, that means less for all the other veterans. So make sure that you go and apply for those. Obviously, local advocate groups, Disabled American Veterans can help you. There's actually law firms that can help you. They only get paid if you get an award on your rating claims. So if you think you deserve some money, do it. If all it is ringing in your ear, even that 10% from the VA gets rid of the funding fee. It's worth it if you're going to buy a house. Let's say you buy a $500,000 house and your funding fee is 2.3%. That's a lot of money. You know, that's like 10,000. No, it's actually 11.5. If you can avoid 11.5, you want to do it because it just gets rolled into the loan. So that saves you $50 a month, $60 a month in payment, and it's just one less expense, right? So if you have questions about that, again, reach out to me. I'm happy to answer. I don't care where you live. I'm happy to answer your questions. So if you saw my name, you can find me all over Facebook, right? You can go to UMortgage and get a hold of me, whatever that looks like. But however I can help you and guide you, I'm a resource. I get busy. So if I'm not, in 5 minutes getting back to you, please forgive me. Give me a little grace on that. But that is my job, is to serve. I've committed to that 100%, whether I do a loan for you or not. So next slide. Okay. All right, here you go. Very, very important. You may not pay any real estate commission or real estate transaction fees. So if the listing agent's only offering 2% to the buyer's agent, and they want you to sign a contract to pay their additional 1%, you cannot do it. They can't charge it to you. They can't charge you a transaction fee, okay? Anything that is not usual and customary, you cannot be charged. So agents slip it in all the time. Be very aware of that, okay? You cannot be charged extra fees. It's against the rules. Now, sometimes lenders won't catch it, and I've even seen it happen outside the contract, which really makes me mad, or outside the closing. But just know that there are people out there that will not try to take advantage of this situation for you and protect you. So keep that in mind. Go ahead, next slide. Okay. All right. Seller can give concessions. We are not in a buyer's market. We're in a seller's market, right? But the seller concession rule, you can pay up to 4% of the value of the house. So if the house is $200,000, they can pay $8,000 in closing costs, essentially, in seller concessions. Okay. Well, hold on. Sorry, let me back up. They can pay 4% in seller concessions. That doesn't include closing costs, right? So they can pay part of the funding fee. They can help pay for taxes and insurance. They can help pay for TVs and appliances, believe it or not. They can pay extra points. They could even pay out high credit balances. So let's say the way that you qualify for this loan is you got a $3,000 credit card you got to pay off, right? The seller can pay that, okay? The beauty of the VA loan, the seller, if they want, can pay that in a seller concession, okay? Go ahead, next slide. Okay. In addition to the 4% seller concessions, they can also assist with allowable closing costs, okay? So if we're not charging 1%, seller technically can pay 4% and then still cover closing costs, including appraisal, credit report, title work, origination fees, etc., even payment of points as appropriate to the market, okay? So the sellers can pay for a lot. Now, we are in a seller's market, not a buyer's market, so it's unlikely you're going to get a lot of seller concessions. But just know, to make things work, sometimes they can do that, okay? That's to your advantage. That's why it's the best loan there is. There's more flexibility in this loan to benefit you, the veteran, than anybody else, okay? So again, it's all about creative financing and making things work. Now, another cool thing about VA, when we get to qualification, but I'll mention it now. Suppose you don't have enough money for down payment or closing costs, but you've got a low DTI. Maybe you just graduated college and started a job. You don't have a bunch of money saved, right? You can actually go and borrow money for closing costs. Like you could go get a personal loan for 10 grand closing costs. And as long as that's included in your DTI, you can do it. Doesn't exist with most loan products. So those are some cool things. You can get gift funds from pretty much anybody, right? So there you go. Next slide. Okay. Primary benefits of a VA home loan. Okay. 100% financing up to the conforming limit. Unless you have full entitlement, then there is no cap on a VA loan. Okay. Gift funds allowed. Okay. 100%. You can get gift funds from anybody, but it has to be a gift, not a loan. Now, if it is a loan, you can still get that, but you have to document it, count it against debt to income. Okay. Lower FICO score requirements. The VA itself does not have credit score requirements. That would be one of the few lender overlays that a lot of lenders have. We've got lenders that will go all the way to 500. Now, with the cost of the rate and the points to get the rate, it doesn't make a lot of sense. You want to look at probably credit repair. Most people that are that low in credit score, there's other things that would limit them from buying, including currently open collections and open trade lines that are past due. But there you go. Lower interest rates. On average, the VA loan right now in my market is 3/4 to 7/8% lower for the same borrower than a conventional loan. Okay. So that's a big advantage. Lower fees. Fees are similar. Some people try to charge more. In our world, fees are similar. No origination fees. So oftentimes, because there's no origination fees or points, they're cheaper than conventional loans. Flexible underwriting. There's not a better loan in the world. There's, like I said, the veteran underwriter, the VA underwriter is implored to make every concession possible to try to make a deal happen, right? So there you go. You can also do energy efficient improvements. Easier said than done. That's one of those you reach out to your lender and see if they do it. Not every lender does it, okay? VA loan is fully assumable by any qualified any qualified person. Does not have to be a veteran. So if you have a VA loan, or let's say you locked in the twos, which very well could have happened last year, and someone wants to buy your house and they want to assume your loan. Number one, anybody can assume it, but please, 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 if you are a veteran, have a veteran assume your loan. Because if they don't, your entitlement is still tied up. You want someone that's got entitlement to take it over and use their entitlement. Otherwise, your entitlement is tied up, and if they ever default, that counts against your entitlement. And it also limits your purchasing power, okay? No prepayment penalty, no mortgage insurance. The funding fee can be financed or paid out. You can go up to 100% on a cash out refinance. If you do not have a rating, that 100% number has to include the funding fee. 90% is fairly typical. When you go above 90% cash out, there are some rate hits, so you know, okay? There is a streamlined refinance, which is a VA IRRRL, okay? We'll talk about that, and then you have seller concessions. So 3 types of VA loans. You have a VA purchase. Let's say that you have a VA cash out, which means you're pulling cash out, or if you go from any other loan type to a VA loan, it is also considered a VA cash out. They don't have a straight rate and term product, okay? Unlike conventional. And then if you have a VA loan and you want to just lower your rate, you do what's called an IRRRL, which is an interest rate reduction refinance loan. It's kind of redundant, IRRRL, right? So those are the 3 options. If you don't currently have VA and you're going to VA, it's a cash out. If you're buying the house to purchase, if you're going from VA to lower your rate, it is an IRRRL, okay? One thing I didn't mention about funding fees, if you're currently active duty and don't have a rating, if you go from a VA loan to an IRRRL, instead of a cash out, an IRRRL is 0.5%. It was on the chart, I just forgot to mention, okay? Next chart, next slide. Okay, let's talk about energy efficient improvements. Go ahead. All right, so some lenders will do this. You can do it, roll it in the loan. Allowable improvements, solar, furnace replacement, clock thermostats, insulation, storm windows and doors, heat pumps, garage. Unallowed, new roof or shingles, vinyl siding, air conditioning units, glass block windows. Now, I will honestly say that I've never done an EEM VA loan, okay? But it is possible. Not every lender does it. So those are the things to keep in mind, but it is possible to do some improvements to the house. Next slide. Okay. All right. Next slide. Cfpb obviously regulates the mortgage industry. We also, lenders, real estate agents, brokers, have a responsibility to our customers. So if you're not being served by who's helping you, shop around. If you think you've applied for somebody and you're locked in, that is not accurate. I've saved VA loans, 2.5 weeks before closing. So you can get, if you don't like who you're dealing with, you can get out of it, right? Pretty simple. Next slide. Okay, and one more. Okay, homeownership stats. 66% veterans who had a home reported they used the VA home loan, right? 33% said they didn't know about it, which is crazy to me. But a lot of the older vets that served didn't know about it. It's a much bigger deal today than it ever was, right? And a lot of people, this is why I ask everybody, a lot of people said their lender never discussed it. A lot of lenders think VA loans are hard. It's because they're lazy. If they don't understand how to do it, find somebody that does. Very simple. Next slide. All right, special adapted housing. So if you've got some permanent injuries, we're talking serious stuff like loss of legs, loss of arms, there are programs out there from the VA that will help cover a big chunk of money. Obviously, up to 50% of the cost, not exceeding the maximum amount determined by Congress. Current amount is $101,000, right? So they'll actually adapt houses, build ramps, widen spaces to get through in a wheelchair, things like that. That does exist. Okay. So they have grants for all of that stuff. So if you unfortunately are a veteran that's got injuries related to that, you definitely want to reach out to someone that's done this. Again, I've not done one of these either, but I am more than happy to dig in if someone needs me to look at this and make sure it makes sense. Go ahead, next slide. Okay. Property tax exemptions. Most states offer property tax exemptions for disabled veterans. Now, we get the question a lot, will they abate taxes before I close so it doesn't show up on my settlement statement? Highly unlikely, because you don't own the house. How can they abate taxes on something you don't own, right? However, some of the lenders that we use will allow us to take taxes and insurance out of escrow. So you don't have to collect all the taxes up front if you don't want to, and then you can apply for your rating. So, but Utah, they give you a percentage based on your rating. My brother at 80% lives in my house that he's buying from me. He is on title, so it's technically his. He has zero tax burden on that property that's worth $500,000. So you want to talk to the local counties, and I usually Google the county name and veteran tax abatement or veteran tax incentives, and normally you can find what you need. But pretty much almost every state in America has some sort of incentive that exists out there. Some are better than others. Go ahead, next slide. Okay. Should a seller accept to be, this is more for realtors, so don't worry about this. Next slide. Okay. Regional Loan Center, next slide. All right, so let's talk about how you qualify. So the VA will look at all income. So W-2 job, self-employment, all of those things. If you're active duty, they're going to look at base pay plus the things we talked about, BAH, BAS, flight pay, extra duty pay, so on and so forth, right? They will look at any indebtedness you have. So if you're paying the VA back for money, that is going to count against your DTI. Now, the VA is the one loan program that looks at more than just income. There are no debt to income limitations on a VA loan. They offer based on what's called residual value. So what the VA does, or what the lender does, like myself, they take your gross income. What they do is they take that, they back out taxes for state, federal, and Social Security. They take the square footage of the house and times it by a certain cents. In Utah, it's 14 cents. And they back that out for utilities. If you have childcare, that is both a residual calculation and a DTI calculation. Childcare counts against you, okay? Now, if your wife stay at home or husband stay at home, they take care of the kids, you can back that out too. And then they take all your other debts. And at the end of the day, you have to have a certain dollar amount left over to meet residual requirements. So I've seen 60, 70% back-end ratio DTIs qualify for a VA loan because the veteran has a ton of money set aside in other accounts, TSP accounts, retirement accounts, whatever it may be, and they meet the residual threshold. If you're over a certain DTI level, which is the low 40s, they want you to have 125%. So for example, in our area, a family of 5 needs to have about $1,200 left over after they back out all of those numbers, right? And if you're going to buy if you're going to be at 60% DTI, hypothetically, because say maybe spouse works, but she's not on the loan, right? If you're going to be over that number, you need 25% more. So at 1,200, you need to be 1,500. So that's some hypothetical figures. So based on qualification, what you need to qualify, what questions do we have?
Yeah, so Jimmy, a few questions coming in. One came in. Do you know of a company that will help with condo association get VA approved?
Usually the lenders can. What state? Ask them what state.
Yeah, I'll have them follow up and get back to you on that part. So a couple other questions.
A good VA lender will help you. Now, if there is back to condos, if there is litigation, it's never going to happen, just like any other loan, right? But the VA's got a pretty flexible approval process. They used to be tied to what FHA did, but now they're their own. And I've, and that's again, the vetted VA is a great place for that. But I've seen people turning around condo approvals for the VA in a matter of days.
Okay, that's great. Thanks. And a second question that came in, can I have a co-borrower on my loan that's not a veteran?
100%, yes. Here's the issue though. They have to cover their part of the VA guarantee. So if you're the veteran, you qualify for the VA 25% guarantee. So let's say the house is $400,000, they would have to cover their half of the guarantee. So basically, they're going to need to be 12.5% or so down payment to cover that. So unless they're married to you, if they're married to you, then they don't need to. Now, two veterans can buy a house together as well, and they can split entitlement and do what they call a VA joint loan. So the VA joint loan, basically, the veterans sign a letter, they agree to use a certain amount of each other's entitlements, right? Now, if the husband and wife are both veterans, they only have to use one entitlement, which actually works pretty well because let's say they PCS and they go to a new base. They use husband's entitlement in Utah, but now they're in Florida. Now they can use wife's entitlement. So there's a lot of nuance to the VA loan that gives you all kinds of crazy and cool options to make that work.
That's great. Thanks so much, Jimmy. And one more question that came in is, am I able to buy a rental property as a VA?
No, the VA does not. VA is for primary residence only. Now, that being said, let me back that up and say yes. So if you as a veteran want to go buy a multi-unit 2 to 4plex, 100% you can buy that as long as you occupy. Okay, there are people in the lending world that'll tell you. People tell you that the VA says you have to occupy for a year. That is not accurate. However, if you're going into this with the idea that you can turn around in 3 months and rent it out, that's really occupancy fraud. It does not really benefit you well. But multi-unit, I did a 3plex last year for one of my Realtor partners who's a veteran, and he bought that. That's the best way to do it. Is buy a multi-unit, live in one, rent the other 3, and then after a year, if you decide, hey, I want to do something different, do it, or 6 months, whatever. I can't give you a guide on the time frame because let's say you get orders somewhere else, right? They can't tell you what you can and can't do per se. Just know that you're going in with the intention of occupying that property, right? So that's how most veterans will start and do that. Now, now if you go in a single family house and decide to buy a 4plex down the road, probably not going to happen because they're not going to believe you're going to move from a house to a 4plex. But that is how you achieve investment properties with the VA loan. It's not a quick turn proposition, but it is possible.
Great. Thanks so much for clarifying that, Jimmy. And that's all the questions we see coming in for now. Definitely, if you have any other questions, we do have time to answer them if you do throw them in the chat or the Q&A, like some of them have been coming in. But Jimmy, any final closing statements in regard to VA loans?
No, I think the biggest thing is, and the best advice I can give people, and it depends, is you need to find someone that's got a history of VA loans. There are some big lenders out there, and they do a good job with VA loans. The problem is they charge them. So make sure you always, I'm a big believer in a second opinion, right? I always love to be the second opinion because then I get the loan because I'm always cheaper than the big retail lenders. But ideally, it's hard for some big lender that's, let's say, in a different state in a call center to do a loan in Utah because they don't know about veteran tax incentives. They don't know about any kind of programs, things like that, which that reminds me. Some states have VA grants, like Utah has a $2,500 grant from the Utah Department of Veteran Affairs that will allow you to get $2,500 towards down payment and or closing costs if you're either A, active duty, or B, separated in the last 5 years and you've never owned a home in Utah. Those programs exist all over the country. I'm not tapped into all those programs because I don't lend all over the country, but a good solid VA lender, and there's a lot of them. And like I said, I can recommend you to pretty much one or a handful of them in every state I operate or we operate in. But they'll be able to tell you what's available in your area, including that and your tax incentives. So that's the biggest thing. Find an expert. Find a realtor that understands VA loans as well, because we are in a seller's market. So you need to understand, your realtor needs to understand how to structure deals correctly in order to make it work. So you need someone that's your advocate that understands either maybe they've served or they've done other VA transactions, whatever that looks like. They need to know what that looks like, what pitfalls and hurdles a VA borrower is going to face. Whether real or contrived, you need someone that's seen it. So that's my advice: is find an expert. Someone that just came out and started lending last week, they don't know what they're doing, right? All the time we rescue VA loans from people that don't know how to calculate entitlement, don't know how to calculate income. They're confused about a lot of things. Hell, half the underwriters in the world don't know how to calculate entitlement. So, it's one of those things. So find experts in the field and do that. And that's why I tell people, even if I don't know you from Adam, if you got a question, find me on social. I'm all over the place. Find my number, call me. I will 100% help you. Make sure you get the right answer.
Yeah, awesome. Thanks so much, Jimmy. No more questions are coming in the chat, but like Jimmy mentioned, you can find them on socials. You can find it if you go to umortgage.com/apply. You'll be able to find some contact information for Jimmy, and you also displayed that at the beginning of our presentation. So first, I'd like to start off by thanking Jimmy. He did 2 presentations with us today. I remember meeting with Jimmy a few months ago, and we were looking through the schedule, and Jimmy brought up, we need to do VA loans for this financial literacy week. And I very much appreciate him stepping up and doing this. This is a great thing for our veterans and sharing information about this topic. So first, a big thank you to you. Also, thank you to everyone who has come and participated to ask questions and just being here. Thank you for being part of Financial Literacy Week and empowering yourselves and helping to empower others in financial literacy. The great thing is we have one more session coming up tonight, just in about 40 minutes. We're going to have a session with one of the top mortgage brokers in California. Matt Gauger is going to be doing a session on refinancing, and we're really looking forward to having you join us then. The great thing is too, if you know anybody who could benefit from this, and if you're even looking back and saying, oh, I missed a session on debt a few days ago. The great thing is you can also share and get other people registered if you think there's a session coming up that they would want to be a part of by going to umortgage.com/financial literacy week. And you can catch, we're running a ton of replays this weekend, Saturday and Sunday, that you can join in on. So to wrap up our session, again, thanks, Jimmy. Thanks, everyone, for being here. We look forward to seeing you at 5 p.m. for our session on refinancing. Have a great day, everyone.
Thanks, everyone. See ya.